This was something I wish someone explained to me earlier as a Forex beginner. Back then I thought the biggest difference in Forex was knowledge, that if I just learned more, I would trade better. What I didn't realize was that something much simpler was holding me back. Something most beginners deal with every day without noticing it. Once I understood that one difference, I went from struggling to being consistently able to make 10K a month. And I'll explain exactly what changed in this particular video. When people imagine manual trading, they picture something straightforward. You wake up, you look at the charts, you see a setup, you enter, you win. That's the picture. But the reality is different. Manual trading actually means that you're the system. Your eyes, your emotions, your focus, your patience, your discipline. So basically everything runs through you, right? You decide when to enter, you decide when to exit, you decide when to stop. And that sounds really good until your everyday life steps in. Because the market don't wait for you. They move when you're tired, they move when you're distracted, they move when you're emotional, and all of that. Manual trading asks you to be calm, consistent, and focused every single time. Not sometimes, every time, and that's difficult. For most beginners, the hardest part isn't learning trading. It's actually controlling themselves while trading. You take a loss, you want it back immediately. So you enter a trade without thinking and following your trading plan. You see price move a little bit against you, you panic, you close early. You see price move in your favor, you get greedy, you hold too long. So basically nothing changed in the market, you changed. Manual trading puts you face to face all day long with your emotions. That is fear, greed, impatience, and ego. And unless you're trained for years, that emotions usually wins. So what is Forex automation really? So automation simply means using a system that trades based on rules and not constant human decisions. So if you want an intensive breakdown of how that works and how to get started with Forex automation, I did a full breakdown in my last video, so go check it out. A simple real-life comparison. Think of manual trading like washing clothes by hand. You scrub, you rinse, you squeeze. So you're basically the system through every step. Forex automation. You put the clothes, you put the soap, you decide how it operates, and once it starts, it runs on its own. So that's basically how automation works. What actually changes when you stop trading yourself? 1. You stop watching charts all day because manual trading ties it to your screen. You're waiting, you're watching, you're checking every small move. Automation doesn't need your presence, you just check results, not candles. 2. Decisions stop being emotional. This is a very big one. When you're trading manually, emotion sneaks in even without you noticing. Then suddenly you're breaking your own rules. Automation follows the plan exactly as it was designed, and that alone changes everything for beginners. 3. Consistency becomes possible because most beginners don't lose because their strategy is terrible. They lose because they can't execute in the same way every time. 4. You trade less but cleaner. Manual traders often overtrade. Too many setups, too many entries. Automation only trades when conditions are met. But you must understand that Forex automation isn't magic. Losses still happen, risks doesn't disappear, and market still changes. You still have to understand what you're using, you still need patience, you're still responsible for your money. And if the strategy is bad, automation won't fix it, it will just run it faster, and that's the harsh reality. Most beginners feel like manual trading is more real because they are doing more. So they are clicking, they are watching the charts, they are actively involved. Automation feels like doing nothing, so it feels less serious. But in trading, being busy doesn't mean you're being effective. The market doesn't care how hard you're trying, it only responds to execution and decisions. So basically results come from doing the right things consistently and not from doing more things. So instead of explaining all of this in theory, let me show you a real example. So here's an account where we've already made over $1,800 in profit from a $1,800 deposit in just 3 trading days. That's 100% of the initial deposit in 3 trading days. Same market, same price movements, just different executions. So which one is better? That's on you to decide. If you're curious about the particular system I'm using, I've left the link in the description. See you in the next one.